Hello?
Yes, ma'am.
Ask Sajia to join the class.
Not yet.
Message her.
Okay.
Quickly message her so she can join the class.
Yes, I give message, ma'am.
Okay, now she can.
Yes, ma'am.
Okay, there is fourth planning factor. Before deferring the gain, you have to check availability of losses in future. Means if capital losses are available in future, whether capital gain is, you are deferring the capital gain, is it suitable or not?
Yes.
Yes, because in future losses are available. When you defer the gain, the losses and gains will be set off and gain will be reduced. So tax will be reduced. So you have to utilize the losses in future. So defer the gain. Okay. And fifth, availability of brought forward loss. Brought forward loss means from previous years if there is a loss today, whether deferring the gain is suitable or not in this situation. Hmm? If there is a brought forward loss today, whether deferring the gain is suitable or not in this situation.
Yeah, we can adjust them.
Yeah.
Yeah, don't defer. Today you have to utilize your brought forward loss. Okay. So whenever examiner will ask you whether to defer the gain or not, you will discuss these 5 planning factors. You will say before deferring the gain, we will check the wastage of annual exemption, future incomes we will consider, future tax rates we have to consider, because if future rates are high, don't defer it. If future gains are low, today rates are high, then defer it. And if there are losses available in future, we can defer the gain. We have to defer the gain. And if there is a brought forward loss, we have to utilize our loss today. Don't defer the gain in this situation. So you have to discuss these 5 planning factors before deferring the gain. Okay, in all the CGT topics which we have discussed in, we'll discuss in the future. And you know, SPD relief is a relief. You're deferring the gain of the part of asset. Whenever tax department will give you the relief, then tax department impose conditions. So what are the conditions of SPD relief? You can see below. Conditions of every relief you have to memorize. First condition, asset must be land and building. Okay, in this question, previous above question, which thing you are selling? On which thing you are selling?
Land, I think.
Land. It means first condition is met, because when you sell the part of asset, that must be a land and building, then SPD relief available. So SPD relief available on the when you dispose the part of land and building. Okay. Second, proceeds of part disposal should be less than 20,000. In my question, what is the proceeds of part disposal?
It was 10,000.
10,000 are proceeds. Tell me whether 10,000 is less than 20,000 pound.
Yes.
Yes.
Yes, it is met. And the third, proceeds of part disposal should be less than 20% of total market value of asset. Underline the word total market value of asset. Total market value of asset always you will get from the denominator figure. In my question, what is the denominator figure?
250.
Yes. Tell me 20% of 250,000. 250,000 into 20%. What is the answer?
50,000.
50. Now, third condition is proceeds of part disposal. It means, what is the proceed of part disposal? 10,000. Whether 10,000 is less than 50,000?
Yes.
Yes. All the conditions are met. So you can defer the gain. But before deferring the gain, just quickly write down all the 5 meaning factors in the exam question. Clear? So the topic is it. Next topic is destruction of asset or asset lost. Today, when you say my asset is destroyed, the tax department will consider it as sale. So first line, even if your asset is lost or destroyed, tax authorities consider it as sale, sold. Means today when you say your asset is destroyed, tax department will never consider the destruction as destruction. They will consider it as a sale. And tell me, when something is sold, which tax you have to pay?
CGT.
Obviously CGT you have to pay. So destruction means sale, so you have to pay the CGT on it. In the eyes of tax department, it is a sale. Okay. Before paying the CGT, number one, you will check whether if your asset was not insured, and number two, if insured. First, if your asset was not insured, then insurance company will never give you any amount because your asset is not insured. So how to calculate the gain? DP is zero because asset is not insured. Insurance company will never pay you any amount. So zero. Or scrap value, maybe you are selling the asset at scrap. So zero or scrap value is your DP. Less cost. Then you always get a capital loss. And you know, on loss you will get the loss reliefs. Which loss reliefs? I will tell you later on. CGT reliefs. Okay. Second, if your
Okay.
asset is insured, then DP will be insurance proceeds because insurance company will pay you amount. So insurance proceeds. Plus, if any scrap value is given, you can write down in the disposal proceeds. Now deduct the cost and you will get a gain or loss. On gain, you will pay the normal CGT. On loss, you will get the loss reliefs. Okay. My question is, if my asset is insured, okay, insured, and you know, you will, in the DP, you will write down insurance proceeds plus scrap value and less cost, you will get a gain or loss. On this gain, you will pay the CGT. On loss, you will get the loss reliefs. Done?
Yes.
Okay, now my question is, insurance company is giving me the insurance proceeds, and you know, my asset is destroyed. I need another one. Okay. So insurance company is giving me money. Obviously, tax department will see the money in your pocket. They will charge the tax. CGT on the gain. But if insurance company will give you the money and your asset is destroyed, you need another one. So you will invest all that money to purchase the new asset. All the money. Your pocket is empty. How you will pay the tax? If insurance proceeds are reinvested in full to purchase the new asset, your pocket is empty. How you will pay the tax? Then HMRC will give you a privilege that you can defer this gain. This gain will be deferred.
Different.
All the gain will be deferred because all the money is reinvested. Pocket is empty. So chargeable now, zero. Clear? And these things are mentioned in the notes. After that, you can revise the notes. Second, if insurance company is give you the insurance proceeds money and you are investing some amount, partial amount to purchase the new asset. For example, insurance company is giving you 1 lakh and the new asset you are purchasing at a cost of 80,000. Okay. So how much proceeds are reinvested, full or partial?
Partial.
How much money is still in your pocket?
20,000.
20,000. So the amount still in your pocket, on that amount you have to pay the tax, obviously now. So whenever you will reinvest the partial proceeds, how much gain will be deferred? It will be a balancing figure. Firstly, chargeable, now you have to calculate through the formula. What is the formula? Choose the lower of number 1 gain, the above gain, and number 2 cash in hand. Cash in hand means proceeds minus how much proceeds are reinvested to purchase the new asset. Obviously, the remaining is cash in hand. So choose the lower of figure. Cash in hand in my example is 20,000, and gain figure, whenever you will do the question, gain figure you will also get. Choose the lower of figure, that will be chargeable. Now you have to pay CGT on it, and the balance figure of the gain will be deferred this amount. Okay. I am sending you a list of questions. We will do the question on it. Have you received the question?
Yes, ma'am.
Test your understanding 6. Belinda purchased an antique necklace for 20,000 on October 2002, which she lost on 30th June 2013. Asset lost, asset destroyed, same meaning. She required compensation of 45,000 from her insurance company. It means asset is insured and you insurance company is giving you 45,000 on October 2013 and purchase a replacement necklace for 50,000 on November 13. Next, she sold the replacement necklace for 65,000 on March 14. Assuming that Belinda claimed the loss to be a no gain, no loss disposal, calculate chargeable gain on the sale of replacement necklace. Okay, firstly tell me your asset is lost. Whether it is insured or not, firstly you have to decide. Yes, it's
Insured.
Insured.
So what is the DP? Disposal proceeds. Insurance company is giving you 45,000.
45,000.
And what is the cost of a necklace?
20,000.
And the gain on the necklace is 25. Now
25,000.
you have to decide whether you purchase the new asset, new necklace.
Yeah.
What is the cost of new necklace?
50,000.
Now tell me, where insurance company is giving 45,000 and you are purchasing the new for 50,000. Whether full proceeds of the insurance company are reinvested or partial.
Reinvested full.
Full proceeds are reinvested to purchase the new asset. So it means full gain will be deferred.
Deferred.
25 will be deferred, chargeable now 0. Okay. If we will decrease the cost of new necklace by the deferred gain 25,000. Okay. If you are reducing the cost by 25,000 today, future gain will be increased. Oh, right? So you will make the base cost of new necklace, which is 25,000. Whenever you will sell the new necklace in future, you will use this base cost. So later disposal of new necklace. How much proceeds you received, DP, of new necklace? 65,000. You are selling for 65,000 and the cost is
Yeah.
25,000 and the chargeable gain on the necklace is 20, how much? 40,000. You have to pay CGT on it. It means when your asset is lost, 25,000 gain is deferred and transferred to the new necklace. Whenever you will sell the new necklace, you will pay the tax on the previous 25,000 gain together with the, right? So in this 40,000 gain, previous 25,000 gain is automatically included. Done?
Mm-hmm.
Yes.
Okay, if I will amend this question and make it as a partial disposal scenario. For example, insurance company is giving you 45,000 and the new necklace in this question you purchase for 35,000 pounds. Done?
Mm-hmm.
Yes.
How much gain will be deferred in this situation? So you are reinvesting partial proceeds. How much gain will be deferred? That will be a balancing figure. Firstly, you will calculate the chargeable now gain, and chargeable now will be lower of number one gain is 25,000, and number two cash in hand 45,000 insurance company is giving you money minus 35,000 you are reinvesting. So how much cash in hand? 10,000.
10,000.
Lower off is 10. So 10,000 which is cash in hand. Quickly you have to pay the CGT immediately in this year. And the balance figure 15,000 will be deferred. Done?
Yes.
Mm-hmm.
You will reduce the cost by the deferred gain 15,000. So the new base cost now is 20,000. Whenever you will sell this new asset in future, you will use this base cost 20,000. And now the new gain is how much? 45,000.
Yeah.
Okay. Clear? So that is the damage of asset case. Easy? Simple.
Yeah.
There is no, you can say, complexities in this question. Okay. The next topic is damage of asset. That topic is destruction. Now the new topic is third, damage of asset. Destruction means fully destroyed. You cannot use it, or a full asset is destroyed completely. But damage means, for example, that is your asset. Some part is damaged, but after repair, you can use it normally. Okay, so you can repair this asset. So if some part is damaged, you can make it repair and use in normal way. It means previous case destruction means HMRC will consider it as a sale, and damage means some part is damaged, so it means tax department will consider it as partial destruction, not full destruction. Some part is destroyed. Okay, so partial destruction, or consider it as a part disposal. Clear?
Yes.
Partial destruction means part disposal, not full sale, part sale. Some part is damaged, so it is considered as part disposal. It means part disposal rules you have to apply. Same rules, DP less cost of part disposal. Formula of cost of part disposal is total cost multiply DP divided by DP plus
DP
part. Okay,
Yes.
so you can see on the notes, tax authorities treat it part damage or part disposal. Now you will check whether your asset is insured or not. So number one case is if not insured, then DP will be zero because insurance company will never pay you any amount. It is not insured. DP zero. Less cost of part disposal. Formula is cost multiplied DP zero divided by DP zero plus market value of remaining part. Tell me, if nominator figure is zero, all the figure is zero, right? If
Yes.
nominator figure zero, it means whole figure will be zero. So cost will be zero. So DP zero, cost zero, gain and loss zero. No gain, no loss arise always. So if your asset is not insured, always no gain, no loss arise. Because DP zero, cost will always be zero. So no gain, no loss arise. And number B, base cost of repaired asset you have to calculate. How? The original cost, add repair cost if you incur any repair cost. Repair mean, in brackets you can see restoration cost. You are restoring the asset, so repair cost. Add it and you will get the new base cost. Whenever you will sell this asset after repair in future, you will use this base cost. Done? So if your
Yes.
asset is not insured, always no gain, no loss arise, you have to calculate the base cost of the repaired asset. Whenever you will sell this asset after repair in future, you will use this base cost. Second case, number two, if asset is insured. Number A, normal part disposal treatment you have to apply and calculate the gain or loss. Normal part disposal treatment means same formulas. DP less cost of part disposal, then you will get a gain or loss. Okay. So if your asset insured, first thing you have to do is normal part disposal treatment apply. You have to apply and calculate the gain or loss. And number B, base cost of remaining repaired asset you have to calculate. And the formula of base cost is original cost less cost of part disposal, add repair cost if you incur any, then you will get the new base cost. And whenever you will sell this asset in future, you will use this base cost. I'm sending you a question. Give me a minute. Have you received the question?
Yes, ma'am.
You can see question number 4. Mr. A purchased an asset worth 50,000. Can you see? 4.
Yes.
Okay, Mr. A purchased asset worth 50,000. Due to fire, it was damaged and restoration cost of 7,000 was incurred. Later asset was sold for 70,000. Calculate gain. In this question, tell me firstly whether your asset is insured or not. Insurance proceed receive in the question or not?
No.
No proceeds were received. No
We are not insured.
were received. Just write down that is the question number 4 for you. If no proceed received, always no gain, no loss right. Only base cost you have to calculate. Base cost of repaired asset. Cost 50,000 and add repair cost in it. Repair is 7,000. So total base cost is new base cost 57. Whenever you will sell in future after repair, you will use this base cost. So now later disposal of asset after repair. What is the disposal proceed TP? 70,000. You are selling it for 70 and the new base cost is 57, and then you will get again 13,000. You will pay the CGT on it. Done? Girls, any problem?
Yeah.
No, that's okay.
Simple, just in the formula you will put the figures. There is no science. Next, the question number 5. Above this question, in sequence, that is a question 3, but I mentioned it question 5. Okay. Above question 4, you can see the question 5. Mr. A purchased an asset worth 1 lakh. The asset was damaged due to fire. Insurance proceeds were 20,000 and the value of asset in damaged condition was 110,000. He did not reinvest proceeds. Later asset was sold for 1,15,000. Calculate capital gain tax. In this question, tell me whether your asset is insured or not.
Yes, insured.
Question 5. Yes, proceeds were received. You know, when asset is insured, firstly, through normal part disposal treatment, you will calculate the gain or loss. So what is the formula of part disposal rules treatment? DP. DP mean insurance proceeds, 20,000 you receive. And less, same formula of cost of part disposal. You can say in this cost of part damage word you can use here in this topic. Cost of part disposal or cost of part damage. Formula is cost 1 lakh multiply DP 20,000 divided by DP 20 plus market value of remaining. What is the market value of remaining? Today your asset is damaged. So what is the remaining market value after damage? Market value of remaining part you can say. Girls, market value of remaining. Anyone here?
110.
Yes. After damage 110,000 it is decreased to 110. Okay. So 15384 is cost of part damage and the chargeable gain 4616. You will pay the CGT on it. And next you will calculate the base cost of remaining repaired asset. The base cost formula is total cost 1 lakh less cost of part disposal or cost of part damage 15384, and you will get a base, and you will have to add the add here the repair cost if incurred. In this question there is no repair cost incurred, so the base cost is 84616. Whenever you will sell this part this asset after repair in future, you will use this base cost. So later disposal of remaining asset after repair. So after repair, whenever you will sell this asset, you will use the base cost. What is the DP? 115,000 and the cost is 84616. So chargeable gain is 30384. You will pay the CGT on it. Done. So the formulas, in all the formulas we are including the figures. Same formulas you have to memorize from the notes. Done.
Okay.
So if asset is not insured, only base cost you have to calculate, and whenever you will sell the asset after repair, you will use the base cost. And in this question, your asset is insured. First thing you have to do is calculate the gain by normal part disposal treatment. Normal part disposal mean same formulas of cost of part disposal you will apply here, and gain 4616 arises here. And then base cost you have to calculate of the remaining repaired asset. After repair, when you sell it, you will use the base cost. There is no problem here, right here. Now my other question is, in this question my asset is insured. Insurance company is giving me 20,000 money. So HMRC will charge the tax on 4616 gain. You have to pay the tax right now. But my question is, my asset is damaged and my insurance company is giving me money, and I reinvest that money to repair the asset because my asset is damaged. I want to repair it. So HMRC is giving me money and I am reinvesting that money to repair the same asset. It means if I reinvest all the money to repair the asset, my pocket is empty. How can I pay the tax? Right? Same question, just like this structure. Or if partial proceeds, I will reinvest to repair the asset because asset is damaged. I want to repair it. And insurance companies proceeds, I am reinvesting partially. So how much gain I can defer? Okay. So see the notes. C heading. If proceeds received are reinvested in part disposal, then you have to check two things. Number one, if partially reinvested, uh, partial reinvestment case will not be examinable in the P6 exam. So in brackets I mentioned not examinable. Only fully reinvestment case will be tested in the exam. Okay. So full reinvestment case I am reading. If proceeds are fully reinvested, even if 95% proceeds are reinvested, you can say, then it will be considered fully 100% reinvested. Means if you will reinvest the 95% plus proceeds, it is called full reinvestment case. If you will reinvest less than 95%, it is called partial reinvestment case. Okay. And in full reinvestment, examiner is saying calculate the gain in normal manner. Just like previous question, 4616, you can say all the gain will be deferred and chargeable now zero because you are reinvesting full proceeds. So it means full gain 4616 deferred, chargeable now zero. Can you see here on the screen? Chargeable now zero.
Yes.
I am relating this formula to the previous question. So firstly, you will calculate 4616 gain in normal part disposal treatment, and all this gain will be deferred because full proceeds of the insurance company you are investing to repair the asset. So chargeable now zero. Now the next thing is calculate the base cost of repaired asset. Tell me, in this whole topic you are using part disposal rules, right? Tell me, we have discussed previously the part disposal topic for land and building, first topic of CGT. Tell me, when you will defer the gain in part disposal, what is this rule? Through which rule you can defer the part disposal gain? Through which relief you can defer the part gain?
Speedy relief.
Yes, SPD. And in this scenario, you are deferring all the gain of the part disposal, right? 4616.
Yes.
On the other hand, SPD relief is applying here. And when SPD is available, when you calculate the base cost from original cost, which thing you have to deduct? when SPD available. To find out the base cost from the original cost, which things you have to deduct? Two methods I already
That two method. One is separately the cost and gain, and another is all
method two. I will
together
say only method
proceed
two you
amount.
can use. So directly deduct the disposal proceeds. Okay.
Yes.
From original cost less direct DP, because in this DP cost of part disposal and gain on part disposal both are included. So directly deduct the DP and add the repair cost if any, then you will get the new base cost.
Base cost.
Whenever you will sell this asset after repair in future, you will use this base cost. In this list, read the last third question. I just mentioned last third question in the blue marker. Can you see last third question?
Yes.
Okay, the question is Mr. A purchased an asset worth 3 lakh. The asset was damaged due to fire. On first day, proceeds received were 80,000. The value of asset in damaged condition was 4 lakh. Means that is cost of remaining, market value of remaining. He reinvested 1,20,000 proceeds for restoration. What is this? He reinvested the proceeds for restoration, mean repair the asset.
Repair cost.
The insurance company is giving you how much money? 80,000. And you are reinvesting 1,20,000 for repair. Full proceeds reinvested or partial?
Full.
HMRC is giving you 80,000 pound, right?
Yes.
Yes.
Full proceeds reinvested. It means full gain will be deferred. Okay. Next, later asset was sold for 5 lakh. Advise whether to defer the gain or not. Same planning factors you can use here. So these formulas, when full proceed reinvested, same formulas you can use. Okay, firstly calculate the gain through part disposal treatment. So DP of the part is 80,000, insurance company is giving you. Less cost of part disposal or part damage. Formula is total cost 3 lakh multiply DP 80,000 divided by DP 80,000 plus market value of remaining 4 lakh. Remaining mean after damage it is reduced to 4 lakh. So cost is 50,000 and gain on part disposal chargeable gain is 30.
30,000.
And all this gain will be deferred because all the proceeds are reinvested. So chargeable now 0. Now you will calculate the base cost of remaining repaired asset. You know what is the formula of base cost? When full gain deferred, then from original cost you will directly deduct the
DP.
proceeds is 80,000 in this question. In this 80,000, cost of part disposal 50,000 and gain 30,000 both are included. So directly deduct the DP and add the reinvestment, mean repair cost, reinvestment cost 1,20,000. So new base cost is 40. Whenever you will sell this asset after repair, you will use this base cost. So later disposal, you are selling this asset for DP 5 lakh after repair and cost 340,000. So chargeable gain is 3,60,000. You have to pay the CGT only. Done? And in this question, just discuss whether to defer the gain or not. Discuss all the 5 planning factors here. You have to consider wastage of annual exemption, future incomes, future tax rates, future loss availability, and brought forward loss availability. That clear?
Ma'am. Yes.
Okay, girl. We covered the 3 topics, and tomorrow we will discuss shares and securities, entrepreneurship,
Mm-hmm.
and takeover topic. Very important.
Okay.
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 Okay,
Thank
ma'am.
you.
Allah.
Allah Hafiz.